What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and we are going to be going over the DXY chart, and then we're going to go over the macro Bitcoin, all the way down into the last two charts will be the daily and the 4-hour chart. There is some daily resistance areas we need to watch if we get one more leg up, and in the 4-hour, we'll take a look at the target we hit and decide if that was the top and we continue down from here or we get that one more leg up. Let's take a look at the charts. Don't forget, if you guys haven't subscribed, make sure you take a second out, do that, and take another second out and smash that thumbs up and leave your comments down below after the video. Let's take a look at the 4-hour DXY. So on the DXY in the 4-hour, we had this this falling wedge here, which we broke out of right here. Does look like we came back down to retest. We did not quite test it yet, so I could be looking for one more touchdown here in the 4-hour RSI to bounce off of this, which could happen in the next 4 to 12 hours, somewhere in that range. But I do expect a bounce off of here and continuation up. Once we break this 99.15 area on the DXY, I do have a target up for the 100. Now, that doesn't mean it shoots straight up in one candle, but I do think it'll be a gradual move up here and getting up to around that 100 point target. So we'll be watching that. I do think we go higher than that, but I think that'll be the next point of major resistance, and that's just a measured move of the widest point of this triangle here up to the top. So we'll be keeping a close eye on that. Now let's look at the BLX chart. This is the long-term Bitcoin log chart. So looking at this as a one big huge bull cycle, and now we are in a bear market. That's why I believe we could be in this bear market till approximately 2023 or so, and I'll show you why here in the next couple charts. But let's just take a look at this. I have this wave 1 here, which we had 5 waves within it, and then an ABC correction for wave 2, and then we had 5 waves up for wave 3, another correction, and then 5 more waves up for wave 5. Now, a lot of people don't seem to understand on Elliott wave theory. They say wave 3 is not long enough. Well, wave 3 is often the longest but never the shortest. That means that it doesn't have to be the longest and it's never the shortest. So it could be in the middle. And this wave 3 is, if you look at it on this chart, because it is the log chart, it makes it look kind of skewed. So if you was to put this on the, let's do it like this. So you can see wave 3 isn't the longest because wave 5 would have been a huge extended hyperwave, which I do believe it was. But if you look back here, wave 1 is right here. It looks really small when you put it in the normal chart. And then wave 3 obviously was pretty huge. And then wave 5, just a blow off top in a macro trend. That's the way I'm looking at it. Now let's take a look a little bit closer. So if we throw the fib channels on here, as you can see, we've talked about this fib channel, which we've gotten a bounce off of many times, and that's the 0.382 fib. And if we do break this, our next level, and there's a lot of confluence here with a lot of different things, guys. The next level is around the mid to lower 20,000 section, that fib there. If that was to break, then we're looking at, down to, depending on if, when, and where, between 12 and 13,000. It could still go much lower than that. Now, the weekly, if you guys were paying attention to the weekly close, I had been talking, we can move this over now. I had been talking about this, everyone was talking about this rising channel. If this bottom trend line breaks, obviously people are going to get extremely bearish, and that's around the 34,000 range. This 200 EMA will also line up around that mid to lower $20,000 section. If we look at the RSI, in the weekly RSI, we did close at this trend line. We are above it now. We've seen this many times until the weekly closes. Now, if the weekly closes and this RSI is above this trend line, then that could be looking towards a reversal and possibly maybe I get bullish at this point. But I do believe we come back down. This was rejection last week, so I believe we could still close down below this, much further below actually. Remember that the RSI follows the body of the candle, not the wick. So until the weekly closes, the RSI doesn't matter in this chart. And we've seen this one get up above the line here, end up closing below. We've seen it again last week. It was above here, closed below. So That is very, very important. Another thing I want to point out is everybody is saying it's just like this dip back here, and I'm going to show you why it isn't. This yellow line is the 55 EMA. Over here, we did not open and close one candle below it. We closed one and opened one, but we did not open and close a candle below it. We have now closed 10, open and closed 10 weekly candles under the 55 EMA. Now, if we was to get a open and close above that, that would verify, that this could be going bullish, and that would be staying above this trend line in the weekly. So no real big things going on until the end of this week, in my opinion. Now let's look at the Bitcoin to Amazon comparison chart. So as you can see, this also lines up with the second test of this weekly trend line, just like we got over here in the Amazon chart, where it, see the weekly hit the 21 EMA, the blue line right here, just like it did just now. I can zoom in on that over here. You can see our 21 EMA's major resistance right there, just as it was in the Amazon chart. Also, after that, you can see if this takes the same amount of time for this to happen, we'll be looking, could be as low as around $3,800. I know a lot of people think that's insane and impossible. Nothing's impossible in any markets, and for anyone to think that something's impossible in a market doesn't understand markets. So anyways, it is very possible we get down to these lows. I'm not saying it has to happen, but if that was to happen, it would be sometimes towards the middle or end of 2023 when the bottom hits. Now, if you're familiar with Amazon, once Amazon did this, it took 10 years for Amazon to break this all-time high. Does it need to take Bitcoin that long? It does not, but I would expect a good 5 to 10 years. If you guys are familiar with what I think of the traditional markets, it's not looking good. You can go watch my last video. It was a collaboration with market makers. We talked about it in a deep discussion. Go back and check the last video I made. But anyways, you can also see in the MACD, once we are in this area right here where the weekly seems to be turning up. I don't know if you can see that, but it did the same thing back here, right along the same spot in the MACD. It's eerily similar how much these two look alike. If you guys, before we go into the 1 day and the 4-hour chart, if you guys are interested in trading, definitely check out Prime XBT. By far my favorite exchange. They do not trade against you like most of the scammy exchanges. You can also trade tons of different altcoins on here. Gold, silver, oil, S&P, Dow Jones, and you can trade pre and after markets on here with no extra fees. Definitely check them out. I have a link down below. You can use my promo code SAVVY50. That'll get you up to a $7,000 bonus. SAVVY25 will get you 25% off your fees. Definitely useful if you are trading. I also have, if you go to my YouTube page, there is a Prime XBT tutorial there. I'll also post it up above. But yeah, let's look at the daily. So on the daily, as you guys know, we've been watching this. We've had this chart on here forever, looking the same. Once we broke this, the measured move of the break of this rising broadening wedge is the width of the wedge there, down to that, you guessed it, mid to lower 20s. Everything is pointing down to that range. We also have what seems to be a symmetrical triangle here. Now, this is why I was talking about daily resistance. Daily resistance here is around 45,000. If we do get one more pump up, and that DXY takes one more tag down, I think that would get us to that 45, although that is not necessary. If you look at the RSI here, there's major resistance here in the RSI. I do believe if we were to come up here, we would get a really fast wick, and then it would come back down really fast. You can see every time we hit this top trend line, here, let me zoom in a little bit. You can see that it's just a major rejection every time we hit it. So if we were to hit it, now we do not have to hit it, but if we were to hit it, then it would, I think it would be a major rejection. I've also showed if we clone this bottom line, then this could be a rising channel. You need to take a look at all the different perspectives, and then that would put the top up at about 47, 48. A lot of people are talking about that. I don't think it'll happen, but it doesn't matter what I think. But I do know one thing about triangles. They alternate touches. You have a touch on the bottom, the next touch on the top, then the bottom, next on the top. we should be coming down to the bottom here if this is correct. And if we break that bottom, we take the widest point of the wedge here to where it breaks down, and that also lines up with our same target, lower to mid $20,000 range. Now, if we close a daily RSI above this trend line here, then maybe we are coming up to these ranges. But until then, it's looking like, if we look at the 4-hour here, we also had a rising broadening wedge. And as you can see here, I have this Elliott wave count drawn in here for 5 waves down, also getting us, and these are measured out, getting us down to that lower to mid 20 section. Now, if you're familiar with Elliott wave, this is a 1, 2, and then we have another big 1, 2 in here. That's a very bearish count. I had this target 43,597. You can see, if you follow me on Twitter, you'll see that I've been posting that for about a week. Also, we talked about it a little bit in my last video with the collaboration with Market Makers, so check that out if you haven't. But if this is correct, we could be going much, much further down, obviously. Now, this doesn't happen in 1 candle, 2 candles. There's lots of up and down all the way down here, guys. But this is just a wave count. So this is the macro wave, and then we have the micro wave within the macro wave. And then even in this wave 3, if this is wave 3 of 3 down, there will be 5 more waves in this wave 3, so on and so forth. That's how Elliott wave works. Look it up if you haven't. I suggest, if you want to get into trading, 2 of the first things to get started with is Elliott wave and Wyckoff. Them are the 2. Elliott wave kind of teaches you how markets move, and Wyckoff has a great theory of why they move. So check them 2 out if you are interested in getting into trading. Now, another thing I wanted to point out, as you can see, these tops are all level across, but up here, we were making higher highs. That is bearish divergence. It's actually called exaggerated bearish divergence. So anyways, was this the top? Quite possible. We could still get a wick up into this area, maybe a stop hunt before coming down. But if at any time we break this 40, 45, same thing we were looking at in the daily, lines up with that. If we break that, then possibly we can go bullish. But otherwise, everything's still looking pretty bearish here, guys. Don't forget to smash that thumbs up. Leave your comments below. Let me know what you think. Let me know if you want to see some more collaborations too, and maybe suggest some people to collaborate with. But other than that, guys, thanks a lot for watching. I'm out of here. Hope you have a great day, and